Now, as you are buying shares in the stock market, you will know that one of the things, or some of the things rather, that you check is, of course, the earnings or companies, the financial statements, to check their performance, how they are doing. You check their revenues. You check also the earnings per share, which measures the profitability of a company. But another most important thing that you check, which not so many people talk about, is the cash at hand that the company has, or the available cash and cash equivalent that the company has. You will notice that when all the companies report their earnings or their financials, there will be always that item that which highlights the total cash and cash equivalent, or cash at hand, which they have, which that figure plays a huge role. It's very important for you as an investor to track that figure also, because it offers the highest level of liquidity in terms of where you find that the business is not doing that well. That cash can come and play to pay daily operating expenses, which is something that will give a breather or a relief to a business or a company. So it is for this reason that you need to monitor this figure, because it tells you the financial health, or the at least how the company could do if things just go south. I mean, we live in the world where things can just happen. I mean, the pandemic back in 2020, it taught us a lot of things. Companies were not expecting such a huge hit from the pandemic, but we saw companies, some of the companies not even recovering from the pandemic. I mean, there are companies that have not recovered from the pandemic, of the hard lockdowns we experienced during the pandemic, because they did not have sufficient cash to sustain them during that period, which it led into some of the companies closing down. Some of the companies, like I said, they have not recovered. Whilst on the other hand, we've got companies that they've recovered. The kind of revenues they're generating are now even over the kind of revenues they were generating back then, which is something that is always good. So there is a statement that people usually say that cash is king, and that is true, because in terms of emergencies, in terms of when things go south, even personally, I mean, if you don't always have cash, or you don't have savings that you can tap into in case of emergencies, unfortunately you are doomed, because when things happen, you will be forced to either go borrow lots of money that it will take time, or it will make you to struggle financially, which is something that is not good. So companies we invest in, or those companies in the JSE, there are so many things that you can look out for. Revenues are important, earnings per share, but cash is also very important. You need to track that, you need to check that, because as I'm doing this video today, there is a company by the name of Ellis Holdings. They are in a process of being liquidated, which is something that is not good. There are companies that are struggling and going to borrow lots and lots of money, which now they are not able to pay back. And if you have, of course, cash at hand, some of these things you can mitigate. And of course, cash and cash equivalent, or the money you have at hand, it can rescue you for a short term, right? It is a money that can rescue the business, or that can rescue you in the short term. Long term, you will need to still make other plans, but at least it can help you in the short term, which it is for this reason that you are seeing companies like Ellis struggling, companies like Pick and Pay having a huge debt, and them not having to pay some of their debts, which is why they are raising the 4 billion via the rights offer. So cash is very important, and as an investor, it's important that in the companies that you invest in, you track this also. You track this figure also, as it measures or as it offers the highest level of liquidity. Things can go south, and if you don't have cash at hand, then unfortunately you're going to struggle, you're going to suffer. I've learned it quite early, or in my early days of investing, to say that cash at hand is also important when investing into stocks. It is not only the revenues which the company is generating and the earnings per share only that you have to look, but you also have to look at the kind of cash that the company is having, and also as they report their financial, is the cash at hand increasing or decreasing? Because if it is increasing, it is a good sign that that company is, it means that they will have more money to sustain them for a longer period than when that figure is going down. When it's going down, you should be worried and should continue monitoring that company to check if that figure gets better with time. If it doesn't, then probably those are some of the reason or some of the signals that might signal you to trim maybe your holdings onto that specific company. I mean, things like this, especially to small companies, small to medium companies, such things, they happen quite often. And one thing that I've realized to those that are buying shares or investing into the stock market, especially the beginners, they like companies because their share price is low or is too low. And that has got its own risks, which we have seen. I've experienced it personally myself on a company by the name of Nutritional Holding, which, yeah, things were just not going well for them. They ended up delisting in the JSE, which is not usually good to investors, because this is the company that some of the people still got their money locked in. And yeah, it's bad. But the good thing is that you've got YouTube channels like this that can tell you information like what I'm telling you now, to say you need to check what are the signs in the company, how the company is doing. Don't just take what people say, because some of the people, yes, they might tell you about the revenue, they tell you about the profitability, but there are some aspects of the business that are also important, and people might not cover that. And today on this video, I want to tap, it is for this reason that I'm telling you about the cash and cash equivalent. That figure is very important, because the more it goes down, the more things want to look good onto that company. So tell me what you think. Did you know about this item or this figure, and how is it looking like in your companies? Has it been growing? Has it been decreasing or dropping? Because if it is dropping, then you need to pay a lot of attention into that company and see if things improve. Because if they don't improve and it continues dropping, then that might be the first signal that maybe you trim that company, you let it go. And of course, this is not financial advice. These are just my opinions. But I just felt like when I read an article yesterday about companies like Ellis going through about to be liquidated, I just thought I'd just give you this quick update and let you know that it is important. It is important that you have a look at that figure, because it offers the highest level of liquidity. The more it grows, the more it decreases that company to go to liquidity, which is very, very important. Otherwise, that's all from me. Do your own due diligence before you buy any company. Don't just take what people say about companies and just implement, because anything can happen. And for you to be comfortable as you are investing into the stock market, one of the things that you have to do is to be at least comfortable as you are investing, and you become comfortable onto a company or stock by doing some due diligence. So go out there, also do your own research, check the companies you are investing in, and I think that will lead you into some good success whilst you invest into the stock market. Otherwise, that's all from me, and God bless you all.